Hi everyone, and welcome to another episode of Cryptocurrency News. Please give me a thumbs up and have a look at the links in the description below. I will very briefly get through the news from 24th of May till today, which is 31st of May 2020. There is a big lawsuit against Craig Wright, and he has claimed that 145 addresses belong to him under the Tulip Trust, and nobody has keys to him, and he has triggered someone so significantly that he has signed a message from these 145 addresses saying Craig Stephen Wright is a liar and a fraud, blah blah blah. That's just hilarious. The implied volatility keeps contracting, and the open interest on options keeps increasing. These are just some block trades on Paradigm. So Paradigm does really decent volume. So they have done just a few blocks, $400,000 each. So these are just these blocks a few minutes apart. So there is some real money buying options on Deribit. US banks now require 0% of the deposits. In the past, it has been a single digit number. Implied volatilities have remained well supported despite the drop. This is for BTC. However, for ETH, they have contracted. So this is just Skew commenting on it as it's important. Glassnode says that this has been the longest prolonged withdrawal of funds from exchanges. According to their data, over 310,000 bitcoins have moved out of exchanges since the Black Thursday in March. The largest outflows were minus 126,000 bitcoin on Bitfinex, minus 95k Bitcoin on Huobi, and on BitMEX minus 95,000 BTC. And these are the charts demonstrating it. If these coins have been withdrawn, that means that either they have moved to growing FTX, which is not growing that fast, or maybe they have gone to lending, which is not growing that fast as well. There was withdrawals. There were plenty of withdrawals from lending websites. Like, for example, BlockFi was complaining that customers have withdrawn a lot of funds after Black Thursday. So if they're not going to lending, not going to other exchanges, they must be going to cold storage for hodlers. It was a good opportunity to buy, so people bought and withdrawn. That's what you should do with the coins. This is some good insight about how Alameda Research is working. This is Sam Trabucco, and he works for Alameda Research, which is a big prop shop. If you want to know how they operate, it's a good idea. So essentially, they are just kind of humans navigating bots. They describe themselves as DJs, kind of coordinating movement of bots. This is porn for Bitcoiners. The monetary base has expanded a lot, just like it did in Great Depression. So I think it's a very reasonable comparison, Great Depression and current times. Bitcoin is not that volatile. It has been very volatile around Black Thursday, but it's actually now less volatile than crude oil, for example. Here I'm just shilling some of my videos, how to secure your BitMEX account. There will be some stuff which you didn't know. Here it's me talking about my position. I've actually recorded a separate video about this, but the implied volatility long term on Ethereum, the December expiries, have contracted so much that I went long calls. This is another opportunity on Bitsy. It's not as significant as there was one earlier this year when Bitsy was trading at a discount in relation to the other exchanges. This time you can just collect 130 dollars per Bitcoin. That's not too much, and you have to take a huge risk, actually. I believe that the risk of Bitsy insolvency. There was this big presentation. So Goldman Sachs has done a presentation for its customers, and they were just talking why you shouldn't buy Bitcoin. This must have sparked some interest in some customers. Like usually when the institution, which maybe you like, maybe you don't like, tells you not to do something and spends time to do that, you wonder, Why are they doing that? Why are they talking about Bitcoin? Maybe I should learn about Bitcoin. A lot of people recently have time to learn about Bitcoin. They have loads of time due to the lockdown. So maybe they are spending this time by learning about Bitcoin. And there is this one thing. If you learn about Bitcoin and you fall in love, it's highly unlikely to kind of go back. So once you catch the Bitcoin bug, there's no coming back really. The fees on Ethereum network have skyrocketed. Suzu says that it now costs him $10 in gas fees to claim some SNX, and it costs $60 to start an Aragon DAO. So these are quite high fees. He also jokes that his Ethereum fees, his Ethereum gas costs him more than the gas in his car. So there is real usage, and these silly use cases of Ethereum are being priced out. That is obviously bad. The fees should be low, and hopefully Ethereum 2.0 will solve that. This is just a funny picture showing, well, economists. You can't artificially prop up the economy forever, the Fed. Grayscale is buying up all new Bitcoin supply and then some. So Grayscale Bitcoin Trust, it's the investment vehicle in which you can purchase Bitcoin kind of equivalent through the trust in a tax efficient manner. So people are paying a large premium just to be tax efficient and to have custody kind of organized by Grayscale, not to worry themselves about the custody. A lot of people are not tech savvy and they decide not to do the custody. So since the halving, only 12,337 bitcoins were mined, and Grayscale has bought way more than that. They have bought 18,910 bitcoins since then. So, you know, if there are not that many bitcoins mined and someone is buying more than there is being mined, guess what's going to happen to the price? Ethereum open interest on options is at the new all-time high, probably because of the contracted implied volatility. Now, why did the implied volatility contract? The main reason is that a lot of, I believe, gamblers just came and sold a lot of puts. They don't think that Ethereum is going to 140, 120. I believe the biggest selling was on 140 put. Now, this guy sold some puts, so he is bullish on Ethereum. I bought his puts, but I'm not bearish. I'm also bullish. So he sold puts to make money. I bought puts just to buy futures, and this buying puts and buying futures, it's like buying a synthetic call. So although he is bullish, I am bullish, we can transact with each other, and as a result the implied volatility goes down. That forces the market makers to kind of match their implied volatility to the market implied volatility, and they are able to sell calls cheaper. So I got some calls as well. We can skip these less significant ones. Overall volatility is still coming down. This is Genesis volatility, just commenting about it, and I believe this is significant as well. So long dated volatility rolling down in the term, rolling down the term structure, and it's hard not to notice. The skew has completely reversed. So in the past, the skew has been mainly influenced by bears buying puts. Now it kind of turned flat, and it went even further after 29th of May, and now there's more calls being bought rather than puts. The CME Bitcoin options open interest is at new record high. So, actually these are volumes, not open interest, but people are interested in buying Bitcoin options. Mt. Gox rehabilitation plan has not been agreed yet. The last documents were from March. They still haven't come to the conclusion. It will likely take months to agree on a plan, and then months to distribute the coins. There's a lot of coins, but they are not going to hit the market probably for around a year. So we're good for an epic bull run, blow off top, and a crash before the Gox coins hit the market. I had a small Ethereum trade leg that I left in the order book hoping to have it closed at 213. I shifted to 220. The price ran away from me again, so I got a fill at 230 as I don't care about a small loss and I want it closed. This brings an important point. There are no dips. This price was just, the price action is up with almost no dips. It's quite similar to the run from 140 and to 280 at the beginning of this year. There were no dips. If someone doesn't understand why we may explode here, and who will be the idiot buying $300 Ethereum and $14,000 Bitcoin, the answer could well be nobody. There is enough leverage and enough optionality in the system to propel us there with hardly any human beings pressing the green button. It could be just machines and automated algos rebalancing the options sellers' portfolios. I've been focusing on Ethereum calls and now Ethereum is flying. Since Bitcoin is lagging with still very low volatility, I just went shopping for short-term Bitcoin calls as well. Do you have a big long? Help it by buying some cheap calls. Force your counterparty to go long on the way up. This is how you can do that. And everything has gone up, like all the alts, but the Bitcoin is still lagging. It just doesn't want to go up. Now, it's important that altcoins are like ropes pulling the Bitcoin up when they're going up. Order books have many resting orders of alts against Bitcoin. When alt USD goes up or down, these resting bids will move Bitcoin together. So if alts are going down, these resting bids in the order book or resting asks in the order book, they will they'll kind of push or pull Bitcoin that way. So now Bitcoin is being pulled up. So if you had some orders in your on the BTC USD order book, BTC altcoin order book, then these resting orders will make arbitrageurs kind of push the price of Bitcoin towards the direction of the alts. And that is pretty much it. Now, I forgot to start with the market structure overview. So I have already spoken about the implied volatility. The thing that I aim to always mention is the premium on the futures, which I believe is very significant. And the premium on the futures has still been rather pathetic. So it's yearly it's around 3 to 4% yearly premium. That's quite pathetic. I believe the equilibrium is at 10%, so it's not yet a proper kind of normal contango that I would consider it to be when there was a 10% yearly premium. Part of the reason is that the swap, BTC USD swap on BitMEX is just trading kind of flat at 0.01% per 8 hours funding. So the rates on Bitcoin are still pretty much flat, but the rates on Ethereum, they are taking off slightly, and that's very understandable. The price is going up. People have to kind of close their positions or hedge the options. There was very, very large amount of options with the strike at 240 for ETH. If 240 is crossed for a decent while, whoever sold that will have to hedge. And the price on Bitcoin didn't really went up much since the 24th. It went just a little bit. I can't refresh. However, the alts are really slaying it. Okay, thank you very much for watching. Please have a look at the links in the description below. Give me a thumbs up, subscribe, and comment, and I'll come with the further updates.